All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And the first thing I want to talk about is that Samsung Galaxy S10 leak reveals a key store crypto wallet. And so there's been a lot of news in the past that, Samsung was going to come out with a crypto wallet, and then it was like, it was fake news, and no, maybe it's real news. And so I think real news at this point. Ex-central banker manufacturers risk falling behind. So leaks of renders of the S10 circulating on social media this week shows shots of the new feature, which Samsung has called Key Store. Assumingly referring to private keys, S10 holders and potentially other smartphone model users will be able to use Samsung software to store coins. And I'm not so sure about that. I don't know if that's the best idea. Depending on how they go about this, I really don't know if this is the best idea or not. I don't think I would store a lot of my crypto on a Samsung phone like this. It's probably a bad idea, but I'll give them the benefit of the doubt for now. Following the release of the HTC Exodus 1 blockchain phone, the limited available information means that at present it's unknown which cryptos the company will support or what form of security the storage facilities will have exactly. So images uploaded to Twitter by Verge show Samsung listing multiple cryptocurrencies, but only Ethereum is openly visible. So we'll take a look at this. You can see it's kind of hard to see, but we'll go to the blockchain key store, and it says import an existing wallet or create a new wallet. Supported cryptos, just Ethereum. So they're probably going to support more than that, and but for now, apparently just Ethereum. We always got the motorcycles going down the road that have absolutely no exhaust for some reason. The feature will allow users to import existing wallets as well as create new ones. Reacting, Twitter users forecast that a mainstream integration of a wallet would force other smartphone manufacturers to copy Samsung, offering theirs as well. Every other smartphone manufacturer, including Apple, will now have to integrate a crypto wallet or fall behind. The hookup comes from various experiments by Samsung in the crypto sphere, these including manufacturing of mining hardware chips and multiple blockchain initiatives. In July, an author at the company claimed that smartphones supporting wallet had the edge over competitors, something critics roundly refuted. Discussing the problems wallets pose to non-technical users, cryptography professor Matthew Green argued even obvious countermeasures like requiring a password only help a little, since a particularly sophisticated piece of malware can just wait for you to enter the password in order to make a legitimate transaction. The issue with malware has become a pressing one over the years, with the number of reported instances rocketing as hackers become more adept at attacking devices. So again, even if I had a Samsung S10, I still don't think I would keep my crypto on it. I just don't think it's a great idea. I can tell that in the future, I'm going to be reading articles of how Samsung S10 users have lost all their crypto. I can just see it now. I don't mean to bash it before I actually see it or before anybody actually uses it. But aren't we all thinking the same thing? Would you keep, tens of thousands of dollars, or even just thousands, or even just hundreds of dollars on your wallet phone like that? I don't know. That's probably not a good idea. But moving on, international police collaboration leads to the arrest of a suspect in $11 million Iota theft. Following international police collaboration, a 36-year-old individual suspected of the theft over $11 million in Iota, as well as fraud and money laundering, have been arrested on January 24th. Suspect was reportedly arrested by the United Kingdom's Southeast Regional Organized Crime Unit. Ooh, man, another long one. Together with the Hessen State Police in Germany, the UK's National Crime Agency, and Europol, following a search warrant carried out in Oxford. So this guy had numerous organizations after him. The operation that led to the man's arrest and the seizure of several of his electronic devices was reportedly launched after the theft of $11 million in Iota from over 85 victims since January 2018. The investigation started in early 2018, according to Europol, when the Hessen police received reports of funds stolen from crypto wallets, and the arrested man would have allegedly used a malicious Iota seed generator hosted on the iotaseed.io domain to generate seeds for users that would lead them to use private keys that he actually controlled. In July of last year, German prosecutors identified a man living in the UK as a possible suspect responsible for the fraud. So, it doesn't pay. Crime doesn't pay. So this was an iotaseed.io, so it was essentially a private, essentially a paper wallet generator that generated private keys, but the private keys that were generated were not really generated. They already existed, and essentially you were just given a private key that somebody else already controls. So normally paper wallets are pretty safe, but in this case, Iota, apparently not. So next article here, why a global recession would be good for Bitcoin. So this is kind of a topic that has been going around since the stock market and the whole world recession might be coming here pretty soon, although people have been saying that for a while. We've been in a bull market since about 2008 in the stock market. Everything has been golden ever since the quantitative global easing. Thank you, our master overlords of the central banks. Thank you so much for just not accepting interest, your magical made-up interest for 10 years. So thank you so much. Let's just all bow down to our overlords for not accepting made-up mysterious interest that they just came up with. Thank you so much. Oh, I just can't thank them enough for not accepting their made-up interest. And now that's over. So interest rates are rising, and everybody's sort of pulling on out now. And we were nearly in a bear market for a little while there. We might be in it now, and it's interesting that crypto at any point now, within months, days, maybe a year, could start actually being a bull market again. And who knows when that could be. So it could be wise to take money from people that are investing into stock, to take money from stock and put it into crypto. While crypto is at the low, stock is at the high. So if you know that stock is going to go down, why not just take that funds and put it into crypto and then move up from there? And don't worry about the boy in the background. He's still a little bit awake. So there are a number of indicators pointing to a potential economic downturn. The IMF has shared its financial market sentiment, stating escalating trade tensions together with concerns about Italian fiscal policy, worries regarding several emerging markets, and towards the end of the year about a U.S. government shutdown contributed to equity prices declines during the second half of 2018. A range of catalyzing events and key systemic economies could spark a broader deterioration in investor sentiment and a sudden sharp repricing of assets amid elevated debt burdens. So if we continue to see significant decline in economic activity, what could this mean for crypto? So managing partner at Cosimo Ventures opined, depending on when a recession hits and what its causes are, cryptos could experience several effects. If a recession were to happen in traditional markets in the near future and the cause of related to excessive contraction of the dollar money supply, which was a big part of the 2008 crisis, then you could probably get a rush to scarce cash and decline in relative market value of all assets that are liquid, such as gold. Hines explained that all unstable cryptos could fall hard, and there could be a surge to the higher quality dollar-pegged stablecoins. Many crypto holders will not want to cross over into fiat, and we may even see a market premium for those stablecoins. Weaker dollar-pegged stablecoins, ones that are algorithmic only or don't have a transparent 100% reserve of actual dollars behind them, may be tested or even shorted until they collapse. If the next recession happens later or is caused by other factors such as loss of confidence in the U.S. dollar itself, then we may see very different outcomes from these postulated above. Cryptos would likely be welcomed and pushed higher as an alternative to the U.S. dollar. As a result, all dollar-pegged stablecoins might then be sold off heavily and tested on their ability to store value. So if a global recession were to impact the value in government-issued currencies and their purchasing power, we'd likely see an exodus into real-world assets such as gold. Precious metals have always been a historic safe haven in times of economic uncertainty, and they are largely resilient to fluctuations of international monetary markets. Should a global recession impact the purchasing power of traditional currencies for those who already understand the benefits presented by the crypto, we would expect to see increased interest in owning Bitcoin, while those who are currently ill-acquainted with the crypto market are likely to show new interest in entering the space. So the article continues to go on. Pretty easy to find this one. It is on bitcoin.com, bitcoincash.com, while a global recession would be good for Bitcoin. Why global recession? So if you guys want to read the rest of it, but I just want to say that if inflation happens, then it would certainly be better to be holding on to crypto, as sort of Venezuelans are doing right now. But it's interesting that crypto was made in 2009, right at the end of the economic crisis that we were in, and ever since it's been in a bull market of the stocks. So it's hard to say what's going to happen to crypto if everything else kind of crashes around it. Are people actually going to take their money away from all those things that are crashing around it and put it into crypto, or are people just going to end up selling off their crypto as well, just because they're short for money and they're going to need to sell it off? So it's a big question as to what's going to happen, but we're going to see here probably pretty soon. And another article that's been kind of going around lately is that the XRP market cap may be overestimated by billions. So as depicted on data providers like CoinMarketCap, as well as Ripple, the distributed ledger tech company closely linked to the digital asset XRP's circulating supply is pegged at roughly 41 billion tokens. But it's in its report, Messari posits that of the future of that figure, 19.2 billion XRP may be illiquid or subject to significant selling restrictions tied to daily trading volume, including at least 6.7 billion XRP held by Ripple co-founder that are subject to an agreement dating back to 2014. In addition, Messari said that it believes that the circulating figure includes 5.9 billion pledged by Ripple co-founder to a nonprofit entity. Furthermore, the report also estimates that as much as 4.1 billion XRP sold via XRP to Ripple's money services businesses also subject to selling restrictions. So, a lot of people coming out lately saying that, like, basically in CoinMarketCap here, you can see that they have a 41 billion supply. And so you take that, by 31 cents, and then you end up getting 13 billion market cap. But there really isn't 41 billion. And you could say the same thing about Bitcoin, too, because I read an article one time that said about 4 billion are probably 4 million BTC are potentially missing, whether, people mined them a long time ago and their hard drives corrupted, or they threw their computer out, or they lost it on a wallet, or they didn't back up their wallet properly, this, that, or the other thing. And in total, maybe upwards of 4 million are now missing. So you could kind of do the same thing with Bitcoin as well. So I see why, XRP is still up there as well. But supposedly it's upwards of 6.1 billion that is overestimated. So if that were true, we'd see like about 6 or 7 billion XRP market cap, and it'd still be number 3, because Ethereum would take it in number 2, and XRP would be 3, and it'd still be well above Bitcoin Cash anyway. So it wouldn't be too much different, to be totally honest. And if anything, it might even raise the price, considering that so many of them are illiquid that you can't even use them anyway. So it's an interesting thought with XRP, that a lot of them are essentially out of the game and not actually being traded, and therefore, should you count them or should you not count them? That is the question. Last article today: New Hampshire bill aims to legalize Bitcoin for state payments in 2020. So what's interesting about this is that everybody seems to think that money, at least the general consensus, is that money is, a store of value. Money is a way to hold value without actually holding all the product around you, and then being able to get what you want with that money, or buy goods and services with your dollar, instead of having to go around in a trader society where you'd have to bring everything with you and then haggle, your 10 pounds of rice for their fish kind of thing. That's a pain. So, and that's a very slow system. So instead, we have money. And another generally recognized thing about money is that the government makes it, or at least the Federal Reserve. I get it. It's not quite. Let's just go with the government makes it. It's going to make it a lot easier. Otherwise, we could be on this for about an hour. And you can pay your taxes to the government. So that's what legitimizes it to most people, is that you're paid in this money, and you can pay your taxes. You can pay the government that money, and they accept it for everything. So if Bitcoin is accepted in all the U.S. states, or at least most of the U.S. states, that greatly legitimizes Bitcoin, in the sense that if the government accepts it, that legitimizes it more. So now you can pay your taxes with it. So now it's not just a useless thing for you that only can be traded with you and another person, which is not entirely useless, but now you can actually pay the government. So the whole argument of, well, you can't pay your taxes in Bitcoin, that goes out the window. And that is, I think Ohio did that. I think Arizona did that. I'm pretty sure. And then Florida, and now potentially New Hampshire, but probably not till 2020. Good timing, too. They just timed that right for the halvening and everything. So lawmakers in the U.S. state of New Hampshire are currently considering a bill to legalize payment of fees and taxes in Bitcoin. The NHB 470 is currently making its way through chambers of the local government, with a public hearing to introduce having took place yesterday. A subcommittee is due to examine it January 29th, with a due date for decision set for March 14th. Sponsored by Republicans Dennis Acton and Michael Yakubovich. Got it. The bill is the latest attempt to get New Hampshire to accept Bitcoin for state payments, and the bill requires the state treasurer to develop an implementation plan for the state to accept crypto as payment for taxes and fees beginning July 1st, 2020. Ooh, right around that happening too. Good timing, guys, because you're going to get all that Bitcoin, and then 6 months after a happening, the price goes way up. The Granite State's renewed efforts on Bitcoin come at a time when local governments throughout the U.S. are choosing to forge their own path in the industry. As Cointelegraph reported, Wyoming is currently leading the jurisdictions with a more progressive stance on the issue, introducing a bill to legally define crypto as money earlier this month. So Wyoming as well. So Wyoming, Ohio, Arizona, Florida, and potentially New Hampshire next, or at least in the near future. So this greatly legitimizes Bitcoin, at least in the United States. If you could pay your government in taxes with Bitcoin, then it's essentially money. You can't use the argument anymore that it's not money if your government actually takes it, whether it's state or federal. I doubt federal will probably ever take it, at least in terms of like your income tax and things like that. And that might be a while, but on the state level, fair enough. So at the national level, the situation remains patchwork, with businesses and commentators still complaining about the less than ideal regulatory landscape forged by entities such as the SEC. So yeah, I'm just saying it would greatly legitimize Bitcoin, at least in the United States, and in the states at the very least that they accepted it in. So we're still at 120 billion market cap. We have not moved basically an inch since yesterday. We were at 119 billion yesterday, so basically the same thing. So 3,600 Bitcoin price, and nothing too crazy going on. No wild wacky pumps that I see. You can see, check the winner of the day, Hollow and PundyX. And then the loser of the day, Waves, which makes sense because of the gigantic increase over the past couple days with Waves. Somebody's got to cash that out. You know what I'm saying? So Bitcoin dominant, still 52.4%. Make sure you guys subscribe to the channel and like the video. That helps a lot. Also in the link in the description, there's some links in the description below of my social media, my Twitch, my Twitter, my Steam, etc. Follow me on those if you have time. That's all I have for you guys today. I hope you guys enjoyed it. And as usual, I will see you guys next time.